Hello and welcome to another episode of Stock Shots. Please remember, I am not a financial advisor. I'm just giving my opinion based on some things I see, like support and resistance, supply and demand, and of course, some indicators that may be on the screen. So always do your own due diligence. Make sure you educate yourself and always look to the left because we're looking at things that have already happened. Think about what things may do in the future. So this is another episode of Stock Shots. Welcome.
All right, let's get started with the C fund. As you can see, we're at a level I was looking at previously. This is where I'm looking for a reaction. The reason I stopped here is because this is the golden zone. So if you do a Fibonacci, you'll notice that in between this level where I marked out this golden box, there is the 5.0 and the 0.618. And the reason that's important is because that is usually a good place for stocks or futures or whatever you're looking at in a financial instrument to either pivot or reverse. But if it goes through this area, it's usually going to go through pretty quick. So I'm looking at it right now as a pivot area. As you can see, the 618 is here and the 5.0 is here, or the 0.50 is here. Lines up perfectly with that. Drew that by the last week. Uh, Currently, I'm looking at the volume. If you look down here, the volume is pretty much the same size as the previous candle, but our last candle was very small. This starts to let me think that we're going to probably have a pullback at least. And we have not broken, I use the 48-day moving average. So we have not broken the 48-day moving average. We have not broken the 14-day moving average. And our volume was pretty high, but we have a small candle. So right now, I'm currently looking to see if we want to break this level. So the level we need to break is the 5,700 and the C fund. We break the 5,700, hey, I'll be in for a buy and turn the fund back on. But at this moment, it's not looking like it's going to do it. Let's just see what happens. So let's go over to the S fund. The S fund is essentially doing the same exact thing. It's not above the 9, it's not above the 48. It's in the same area between that 0.50 and the 0.618 on the Fibonacci levels. And we still have gaps to the downside, if you notice, all the way down here. We have two gaps down here in the 1700 area. Now, I will say this, for the last couple of weeks, we've been doing well, and it's because of fundamental news. It hasn't really been because of anything concrete. And this week we had news about a deal that really was nothing that we had with partners that we really weren't losing against. So it's like, okay, when are you going to deliver? So unless there's like really good news this week, and I think this week we have CPI and PPI, um, let's just say things would line up for us to reverse down to the downside. But you never know what can happen. We can have a tweet. We can have I don't know, a rant, a rave, who knows? But that can change how the market goes. And currently, between each of the C and the S funds, we are in between two long term trend lines. Okay. So I'll show it to you here. I have these started. This one, the shorter one, was back in 2023. The longer one is back in 2020. Okay. We're in between both of these. Currently, if we get good news, we're going to the races. Let's put the rockets on our backs and get the money ready. But if not, we're going to be going down. And if that's what's happening, we have gaps down here to the downside back where from 2023. And if you notice, I'll go back to the C fund. You'll notice the same exact thing. We have those same areas and gaps in both of these funds. So we need good news and good deals. Everything now hinges on what one person says. So let's see what's happening with the international fund because that has been doing well. The international fund now has been going past our last resistance area, and it did break it. Now it broke it last week. That was great. Went up a little bit and came back down. So essentially, you're right where you were at the end of the previous week. It looks like it wants to go higher. Now, if it does, we already have a target price of $89. I'm still waiting. Like I said, if things go bad here with our stock market, most likely international funds going to be the place to go. And if you notice, that $85 wasn't our last high. This area right here was $88.70. So even if you're like, I missed everything, I missed all the moves. No, you didn't. You didn't miss anything. Until you break that last really big high with good volume, you haven't missed anything. Okay. So be wary, take your time. We're going to look at one last fund, and that's going to be the bond fund. But with this one, we're still just chopping sideways. It's not going anywhere. It does have a gap down here in the $96 range. Currently, we're right below $97.80. So right now we're at 97.76. But it ain't looking good for the bond fund. Let's just put it that way. We could look and see if the international fund's going to be our best bet going forward. But once again, you got to listen to the news. Everything until you get concrete evidence that we have tariff deals and some of the weird stuff that's going on in the country calms down. Is not a place people really want to invest but so much money. So we'll cover a lot of other stocks when we go to our other show, The Exchange. Link will be down below. And see you next week on our next episode of Stock Shots.